All right. Hey, welcome to the Mike and Jake show. Uh,
Hello, everybody. Welcome to the
hey,
show.
you take it away, Jake.
Yeah, so we have special guest today, Mike Gaizick. That's how you say your last name, right, Mac?
Gaizick, you're close.
Gaizick.
Isaac.
That's it.
Yeah.
Okay, so Mike Gaizick is a CPA and licensed realtor from Shepton, Pennsylvania, in East Union Township. He serves as the township's treasurer and right to know officer and was appointed by Governor Josh Shapiro and confirmed by the Senate to the Pennsylvania State Board of Accountancy in 2024. Michael graduated magna cum laude in accounting from Bloomsburg University and today balances public service with client work in audit, tax, and real estate. So Mike is my accountant. He helps me, and he's a phenomenal accountant. So today we're going to ask him some questions about some of the new tax law that's recently passed and how he's gotten to where he's at. And you also own properties, right, Mike?
Right. Yeah, I have rental in Bloomsburg.
Yeah, awesome. So real quick, what led you, because I was doing the research on you and I saw that you graduated in 2020.
Yeah, I didn't pay you to say any of that stuff either. So
Yeah.
that was all, on you. Thanks, Jake.
You're welcome. Well, it's all public, man. You got a good track record so far. You're probably one of the youngest people to be appointed to the Pennsylvania State Board of Accountancy as well. Are you the youngest ever?
I'm not sure if I'm the youngest ever, but I think I'm the youngest member of the board that's currently serving.
Yeah, definitely that for sure. So how did you, like, growing up in Shepton and then finishing Bloomsburg magna cum laude, like, what pulled you towards accounting so early on? Why didn't you choose a different career path?
Yeah. You know what they always say, accounting's the first thing on the list. It starts with A and you go down, but that's the fun answer. But in reality, I've always been good with numbers. In high school, my favorite subject was math. So I did really good in all my mathematics classes. I had advanced calculus. Even though I don't need a calculus anymore, I always liked how numbers worked. And I just thought that accounting, it kind of leads you into more of a business field. So you're doing more with people. So through accounting, I get to meet a lot of people and a lot of really interesting people like, you guys. And it's great to work with you and people trust you, right? So like I get a lot of people who trust me with their money, which is something that's, a pretty big responsibility. And I feel like, just growing up, I've been able to earn that responsibility, and accounting kind of lets me help people the best way possible, that I know how. So that's pretty much the why behind accounting. Didn't know that, essentially at the beginning. That's kind of more what I learned as I went through it. But I'm really glad I chose it, and it's certainly worked out pretty well for me so far.
Yeah, so you basically went into it to become like just well-rounded, it sounds like. And it seemed like everyone says you should at least take accounting courses or at least minor in accounting if you're going to be a business major or whatever.
Yeah.
And
Yeah,
it's
one of the things in the textbook is that accounting is the language of business, right? That's one of the cliche terms. And at first, I don't know what that means. Like, okay, what does it mean? In business, we don't speak English, we speak accounting. But no, that's not necessarily the case. But by having knowledge of accounting, like you're able to go into businesses and you understand, kind of how the numbers should work so that you're making profit. So if you don't know, what the numbers mean, you're not going to be as good at business as somebody who has, a better, accounting system. So that's kind of what I would say is the main thing of why I think everybody should know at least a little bit about accounting, even if you don't want to be an expert.
Absolutely. And when you get a good accountant, because I've experienced this firsthand, you can really learn a lot from that accountant. Like I think you've like taught me how to read a P&L over the last few years. You've definitely taught me a few things. So, and in the trust aspect of things, I think you have a login to my bank. So like, yeah, the trust that.
Yeah, he just looked up.
Yeah, right? Do I? Uh-huh.
Yeah, well, it doesn't work, but it was.
Okay, there you go.
But so also you're a realtor. So what led you, like, how long ago did you get licensed?
2017, I got licensed.
Oh,
I
wow.
actually got licensed. I could tell the story about becoming the realtor if you want to hear that.
Yeah,
Sure.
because that
Okay.
happened when you're still in college, right? So that's
High school, I think. No, maybe right after I graduated high school, I went into that because part of the thing is when you graduate high school, it's okay, well, how do I make money? Because you're in college, college kids are typically broke college kids. And, I'm not a trust fund baby here, even though, that would be nice. So I had to go and figure out how to make some money and try to pay off some tuition fees so I don't get saddled up with all kinds of college debt. So I thought, well, real estate, that would probably be a good way to, learn a little bit, make some money. And there's a lot of accounting aspects that go into real estate. So I thought, okay, maybe it would fit. And when in reality, it was just at the time like, okay, like I could make some money doing this. So I went and I took the course. It was a pretty simple course. I think they changed it now so that you need more hours. But at the time, I think it was.
Yeah, it's about 70 hours.
Yeah, I think at the time it was even less. It was only 40 or something.
Yeah,
like
there's a state and a federal hours. So I think it comes out to like 70 total.
Okay. Yeah. So that was really nice. I had the best teacher. He passed away. It was Bob Walker. I'll throw his name out there. He was a really, really nice gentleman. And he did the courses. And so I went through, I passed the test. I got licensed and I started with a brokerage in Hazleton while I was still in school. So I thought, I could go and, be in school and do real estate. But what I've learned is that you have to find the right broker just from real estate, because at the time, the broker that I started with wasn't really open to going to, having someone go to school and be an agent. Like
he wants a full time.
Yeah. And I said, well, I don't want to give up school. Because, my parents always said that the thing that'll stay with you through your whole life is a degree, your education. So I wanted to, I started school while I was taking the real estate courses. I was taking college courses too. So I figured that, okay, I started this, I'm going to finish it. And that's what I did. And I kind of put the license in escrow for a little bit, right? Yeah. Yeah. So I put the license in escrow, and then through the township, through the solicitor, he has a broker. He set me up with a broker who was more than happy to take me on as like a part-time agent. And I've done a handful of deals with him throughout the years as his agent. And he's super awesome, lets me kind of do, real estate work and accounting work. I've helped him with accounting at the brokerage. So everything works out nice. But I thought that was
I can't believe any brokerage would turn you away. You're such an asset.
I know.
Well, at the time I was 8 years younger. And
yeah, of course. Did you sell any houses when we had that crazy markup, like 2021, 22?
Oh yeah, I average like one or two deals a year.
Because I would have definitely pulled it off the shelf when you just put anything up and it just sold.
Yeah, right. Oh, COVID. It wasn't active in COVID. It was right after COVID I got active.
Yeah.
So say 2021 or 2.
That's when they just started overpaying.
Yeah.
It was easy then.
Yeah, because everybody came out. Well, people were stuck in their houses. They probably wanted to sell them just to get out of their houses.
Yeah.
After being quarantined for over a year. Like that was, I don't know how politics are, but that was way too long. I don't know.
How about, were you in the real estate group in Bloomsburg? They had a club, a real estate club.
Real estate finance club.
They had a real estate club.
Yeah.
Who was the guy that ran that? Stephen Welch. Stephen Welch?
Dude, I ate dinner at Steve Welch's house before. That's funny.
So he invited me.
Well, I don't know him that well.
Yeah. Well, he's got a lot of property.
He sold them all.
Yes, he did sell it all. He said when we last he says I'm going to sell it all and I could do whatever I want. He travels around.
That's fine.
But I was a guest speaker up there. I went up there and I spoke at his the Bloomsburg University group, which is neat. Yeah, he's a good guy.
Yeah.
But
I went to 1 or 2 meetings. I took a real estate finance course. That's on my college transcripts. That was after I got the real estate license. So that was a really easy course. That was an easy A, what they call it. But,
you sound very smart. It's all easy. Listen, there's some people
that Eddie Jake stuff. If you pick up Eddie Jake's work, it's crazy.
Yeah, I was going to ask you about how's Jake, but that's fine.
Yeah.
We'll do that off camera.
Yeah, well, we've had some crazy seller finance loans we got to pay off and all that stuff.
Yeah.
So that's all fun.
He's the best at getting a deal done. He knows all the terms you could put in there. He'll get the best terms, and then I figure out how to do all the back end stuff. Right? Hey, Mike, I did this today.
just make it work.
Yeah.
Yeah, it's great. I mean, it's awesome to have a talented person to.
Well, that's nice that you guys have that relationship, and I hope all your clients are like that.
Yeah.
So do you mainly just do real estate, or are you
Yeah.
like an overall person when it comes to accounting?
Yeah, I'm a full-time accountant. Yeah.
Yes,
And then
but I'm
I
saying, but do you just specialize in one field? So you do more than just real estate investors and
Yeah, I'll
yeah.
do auditing. I do a
Okay.
little bit of auditing. I tend to like that too because auditing you get to see kind of the bigger sets of books. So you'll see nonprofits and those kind of companies,
Yeah.
and that really helps when it comes to being able to understand P&Ls and understand statements. When you go and audit them, you're checking to see if they're right, and it gives a pretty good picture of how they should be.
Yeah, that's pretty neat. Because
Yeah,
I'm not gonna say my accountant's names or anything like, but I had a wrong accountant at first. They didn't understand real estate, which was hurting me. And then I got another accountant, which they're great. Now I'm not gonna say their name either because they might whatever. But now it's a big difference. I pick up the phone just like Jake calls you all the time.
Right.
Before I do it, I actually ask. I know Jake does it the opposite way, right? But I like to just, hey, what if oh, no, do it this way, do it that way. And I really appreciate that.
Yeah.
It saves me, it saves him. Cause at the end of the year, I just give a box of, I said, dude, what are you doing?
Okay.
But yeah, that's cool. That was it.
Yeah,
Yeah.
some of your, I mean, and with the auditing, Mike, so you graduated 2020, COVID,
Right.
and everything else that happened. But like accounting is a pretty demanding job, right? Especially around tax season, especially
Right.
when you're doing like big audits, right? So with those big audits, like I don't know how much you can disclose because it's your customer's information, but like what does that look like when you go in and you just like get into everybody's books? Because you've audited some major corporations as well.
You know which one was my favorite? And this was actually at a former employer. This was right when I graduated. I started in Bloomsburg. I audited the Bloomsburg Fair, and I thought that one was really neat.
Oh, wow.
Yeah.
Yeah, because they used to deal a lot of cash, and then they stopped that, right? And once they stopped that, their revenues went up like a ton.
Sure.
Well,
Of
because it
course
was
it's going to go up.
the person who was taking the ticket was the same person who was getting the cash, right? So it's like, I'm gonna give you cash and give a ticket. So then it was pretty hard. So now they separated that function, right, where somebody gives the ticket and then somebody else takes your money, right? So now, like after that happened, it's like your revenues went up 30% or something like that because
Yeah.
of
So then you really know how much they were hiding, right?
well,
I mean, that's kind of obvious there. I
Well,
mean,
or waste or whatever. So
yeah.
having a good accountant, I mean, you can catch waste and you can
well,
catch.
yeah, they call it controls and that, your internal controls of what you have. So it's the way you design stuff so that it works, the first time it works well. You don't have that many problems down the road.
Yeah. So you're also like deep into public service as well. When did that start?
Probably before everything. The township started in 2018. I knew the tax collector, and she said, "Hey, there's going to be an opening at the for the position." She goes, "Because all these people in the town, like they like to work with people that they know and that they like, and that." So she goes, "Here." She goes, "This position's open for treasurer. You should fill it. I know you're going to accounting school. I know you're going to be pretty good with numbers. Go and put your resume in there." So again, I was a kid, maybe 19 years old, just still in college and that. So I was in, maybe 2 years into accounting. So a little bit of the accounting courses. They were nice enough at the township at the time to say, "Listen, yeah, we're going to give you a shot." I learned through it, pretty much learned on the job. There was nobody really to train you there. So you go through the first year. I will say I had a great secretary at the time that worked with me. She helped out a lot between just being able to bounce ideas off, because there's a lot of other stuff that comes up with state jobs or these local municipalities. It's like you have state money, you have federal money, you have liquid fuels, you have compliance, you have these reports that you have to fill out, and
I
just
have a
all
liquid
that.
fuels question. I have a liquid fuels question. So
Okay. Yeah, the tax that you pay. That's why Pennsylvania has the highest gas prices in the country, maybe except for California.
Yeah.
It's the
California's
tax.
number one. We're number two.
Okay.
we're
Which is
right up there. Yeah.
Yeah.
Why is it? Why is it the fact? I want to go back, but why is it why do we have the highest gas tax or one of the highest gas taxes?
It's what the state legislature, put in there. And
How it
they set
is.
the rate.
So while you're becoming a treasurer and learning that job, you're going to school too, and you're kind of becoming an agent around the same time too.
Yeah, I probably stopped being the agent. I was probably my license was probably in escrow at that time.
Okay.
Yeah,
Okay.
because
That
then,
makes sense. So what do you do with all your free time now?
yeah, free time. There's not much of that, honestly.
he comes on the show.
Yeah, seriously. Yeah. Other than that, I still study more. I was taking MBA classes online, so I was doing that.
Are
Yeah,
you?
my
So
my
you're
kid did that.
still
Good for you.
you're in college right now. You're going to get your MBA. You're
Yeah,
still.
take little online classes. You take one or two a year. You just keep going. So I'm set to graduate in a little bit. A couple more classes. Obviously, don't take any in the spring during tax time, right? But
Smart.
after that, you just keep going. And you have another feather under the cap, I guess.
Yeah.
And I
Yeah.
like to learn. It's really neat.
You should
I
get
was,
your MLO as well, Mike. You should get
yeah.
your mortgage originator license.
Okay.
We good. So before we get into some of the things, some of the tax deductions that real estate investors can use, and some of the things that we see in real estate, and I guess business in general, I do have a question about the liquid fuels tax fund because there was an audit. The auditor general recently closed out a liquid fuels tax fund review with East Union. What are the takeaways for residents about road dollars and reporting?
Yeah. From that audit.
Yeah.
Okay. I'm thinking about, yeah, you
Yeah.
didn't, just so everyone knows, Jake didn't give me any of these questions ahead
Yeah,
of
I was
time.
just gonna
So
say, man, he's just throwing it on you like
yeah, so I have to
that.
go and I have to think like, okay, what was in the report? What did it say? And then kind of try to distill it here. But yeah, so well, the liquid fuels you use for roads, and because that's what it's for. That's why everybody pays the tax on gas, right? So you pay the tax on gas. That all goes into I want to say, I'll say like a fund at the state level, right? And they disperse that out to municipalities, right? So what they do is they give us an annual allocation, right? So they give us, say, like it's 100,000 a year, roundabout numbers, right? And then from that allocation, we could go and use that towards fixing projects in the township. So we have one that we just complete that we're like is completed in 2024, right? We did some road like alleyways in Brandonville, right? So what we did is we use some of that money to go pave the roads, right? And that money then gets taken into a project, right? So you give them all of your documents. They're very thorough. They want the certified payrolls. They want your bid documents that everything was bid out correctly, and then once all that documentation's in a row, like your material delivery slips, they'll say okay. They'll approve your project, and you could pay out of liquid fuels. So we were able to use that money and improve the roads in the township. So that was pretty much the key takeaway. And
Awesome.
yeah, and the auditors go and they keep track of okay, is everything that you spent or all your projects complete? And they have those.
But
They publish the
it's
reports.
only for pavement, the roads.
No, you could use a snow removal. So they would
Okay.
have that. We don't usually get into that too much because it's more compliance. The roads is probably the easier thing because you could use a big chunk and do your compliance at one time, right? If you're using it for snow plowing, some people use it for wages for their road workers. That gets a little tough because then you're keeping lots of documentation to, provide the state because they're going to go and look at that, for every penny. So if you have a big project, it's kind of easier for the documentation wise, to have everything, in a row than trying to go and have many little things.
So how does the town get that? Like, how would my
Yeah.
town get that? They have to apply
Yep.
for it. It's a grant
Nope.
or
Nope. Everybody gets it. It's an allocation. So it's based off your population and the miles of roadway that you have in your
okay.
municipality, right? Because PennDOT is the state that takes care of your state roads. Like
Yes.
what's the state road? Like 93, 309. Those
Sure.
are all state roads. So PennDOT covers all them, right? Townships have your little roads, your roads and alleys that aren't the state roads.
So
Uh,
every year
yes.
they get fund for that.
Yep. Municipalities get funds for that to do
To
their
maintain roads.
roads.
I'm just going to my next meeting because there's, my road needs a little work. And they're like, oh, we're getting a grant. That's what they're saying. They're getting a grant.
Okay.
And now I'm going to bring up this gas tax.
Okay.
It's liquid fuel, right? Whatever. Yeah, I'm
Yeah.
Well,
writing
I
it
mean,
down.
I think that's one of the justifications is that Pennsylvania has like a lot of roads, and that's why we have a high gas tax or something. But thank you for sharing all that, Mike. I'm sorry for throwing that question on you out of the blue, but I think that does help people get a better understanding of like what it looks like to work in one of these roles for the government. I mean, I think you do a lot, as treasurer for East Union, and That area is actually developing a lot recently, like the whole McAdoo,
Mhm.
Hazleton, that the industrial plant, the Humboldt industrial plant, and I think there's some data centers that are coming there. So that's really exciting for the area. Have you seen any of that starting to come into Shepton at all? Any of like the data center investment or anything?
There's a certain spot because in public stuff there's zoning,
Right.
so all your zoning requirements. So what they do is they're coming into the places that are already zoned for them. So there's in East Union Township, there's an area up by Humboldt Industrial Park that's zoned industrial. So that's where they're all going, and then they go up pretty fast. I don't know if you ever seen one from start to finish,
Like
but
a
from the
year,
time that
right?
they're yeah, the time that they're applying for permits to you could build, tens of thousands of square feet
Square
of
feet.
warehouse space in under a year. Yeah, it's pretty amazing.
Yeah, they don't play around. They get it done. Yeah.
Yeah, and they're building that in Humboldt. So that's Hazel Township. Hazel Township, it's all sides of 924. Klein Township is building up. East Union, we have a little bit. It would be a lot better if we had a little more area, but it's just hard to, you can't make more land
Nope.
Yeah.
in that
But
section.
but you receive the tax revenue off the businesses that operate in your county, right?
Correct. Yeah.
Okay. So like the more businesses that you have in your county, the better for the
Yeah,
county.
it's because
Because
a lot of people don't know this, but you receive tax revenue from a couple different sources, right? So you receive tax revenue from the real estate taxes. That's like kind of number one. Sometimes they do that Keystone incentive, so your KOZ status, where you could abate taxes for 10 years, and you come in,
Yes.
and then
right.
they pay real estate taxes, right? But at the same time, like what people forget about is okay, well, all the workers in the plant they're paying earned income tax. So Pennsylvania, you have your local earned income tax
Mhm.
so that goes on everybody's wages. East Union gets a lot of that because we have a lot of people who work in, these places in the industrial park that's in the part of our township. You get that local services tax, that EMST for the ambulances and fire. That's that dollar a week. Some places have, most places have it. Some places don't. Um, and then you also get transfer taxes. So whenever the property is sold, right? You guys know from
Yep.
all of your real estate deals, right? That's we had a couple big ones every so many years, right? It might be, a $10 million sale, and the township will get 0.5% of that. Right?
Okay.
It's broken down. It's broken down like some 1% to the state, 0.5% to the school, 0.5% to the municipality. That's that breakdown.
So a healthy real estate market really benefits the local government as well. And
Oh, big time, big
they're
time.
able to use that money and reinvest back into the community and
Yeah,
do
Well,
everything.
that's nice to know that at least a half a point goes to the town. That makes a big deal.
yeah.
I hate paying the
Uh,
transfer tax, but it's going to something good, then it's all right.
The big problem is like when you're paying a high transfer tax, like you do in Scranton, and it's going to Scranton, but they're not like the roads are all bad.
Yeah,
You
the
know.
bank that's what bothers me is that we have the highest tax rate on gas, right? And our roads are
mhm.
not. Our
Yeah.
roads suck.
Well, we need more controls. Is that the word we used, right? The controls. I think
Yeah,
$3 billion like went from PennDOT to the state police like in the last few years or something. I read something big about that. That
yeah.
Pennsylvania failed an audit or something like that. Um,
Probably the one that always like takes the cake is like the Turnpike Commission because they have those toll by plates and
Yeah.
everything, and just the cameras malfunctioning and them not being able to kind of figure out the best way to capture that stuff. It leads to losses in the millions of dollars. They'll have that
Does
because
it? But I always get something, they always charge me more and then I have to call. I think that's a scam with them, right? They charge me $4, but then I call and they say, "Oh, you're a member. Okay, it's only $1.50." But think about all those people that don't call and just pay,
yeah.
right,
you
yeah.
know?
Oh,
Well, that
And
makes up for some of the ones they miss and all that. I'm
yeah,
sure.
so I think they're doing okay. And just think of all the jobs of how many jobs were lost. I don't know the numbers, but they got rid of all those people.
yeah.
So
And
who's
some places they're still there. I think.
where?
I don't
There's
know. Well,
nobody anywhere.
the New Jersey one, they're still there. I think.
Okay.
Yeah, I only care about Pennsylvania.
Yeah, I do too. But yeah.
So
Anyway,
yeah,
so
next question.
yeah. Well, I think that helps, everybody understand how the local government works and how like business is good for a community and
Mhm.
that's what generates revenue for the county to be able to reinvest it for its citizens. I think that's important for everybody to understand. Same thing with real estate. If you have a bunch of real estate in your township that's falling down, it's not benefiting anybody anything really, because you can't really get tax revenue off it. When you fix it up and the whole market goes up, you're going to increase property taxes and everything. So it's people got to understand that, because a lot of landlords get a lot of hate and a lot of business owners get a lot of hate lately in this new environment. So that's the last thing we need. We want those things.
Right. Yeah.
So how do you think that like being a CPA has benefited you in real estate? So I know you just started recently, like actually buying properties and stuff like that, but how has, for instance, like working with someone like me or anybody else like helped you to kind of see what you wanted to do? Because you get to see like, okay, this business is doing this over here. This guy's investing in real estate over here. Like, so you can kind of see what people are doing and pick and choose what you want to do. How has that helped you, and how have you been able to pick from that? Have you seen anything that somebody's doing and you're like, oh, I really want to start doing that now, or investing here?
Or the opposite.
Right.
I
Or
see
the-
what they're doing, and I don't. Oh, I'm not going to do that.
Yeah. I think the thing that you learn when you're actually out there doing real estate and everything is when you're in accounting, you see the numbers. It's like some people just think, oh, well, the real estate work. It's like, that's not bad. I just go and collect the rent check, and it's
Sure.
1, 2, 3, right? They call it passive in taxes, right? So there's rules for real estate is a de facto passive activity, okay, which means that it's not like a business of manufacturing or anything like that, right? That see, this is a complicated rule. I'm trying to think of how to kind of explain it simply, right? So before I go down the rabbit hole here, I guess.
Yeah, explain the difference between like unearned income or passive income and active income.
Right. Yeah. Because active income is like your day-to-day business activities, right? So if you're in a business and you're spending 8 hours or, whatever it is, and you're, at the store, you're in retail, you're selling things to, customers and all that stuff, right? That they consider that like an active business. So all of your income comes in, all of your losses are deductible. That's it, right? Well, real estate, because it's a passive activity, they say, okay, well, you're just collecting rents. You're because they don't want you going and funneling, like paper losses down to offset your losses or your income from your active businesses, your active employment, right? So unless you're a real estate professional, you guys have that, you're not allowed to use the losses from a passive activity against the gains from your, regular job or your active activities. So because they say it's a passive activity, you would think, oh, well, there's not much to it. Being in real estate, seeing what you guys do every day, like you could tell you, it's far from it.
Yeah.
So you guys are handling calls from, tenants. You're fixing all the issues. Hey, call it my sink's blocked. You're gonna go out there. You're gonna have to fix the sink. You're calling a plumber to get everything done. You're screening tenants. You're screening their applications. Right? There's a lot behind the numbers that you don't see. So maybe as being a CPA and being in real estate, like I appreciate what you guys do because I see what's going on behind I got this amount of rental income on my return. I paid all these expenses. And plus it helps because you kind of know what's high or low. And if something's missing, you can tell like here's your insurance, where are your insurance premiums, right? You wouldn't believe how many people that you see in accounting that misplace or forget their deductions, right? It's like, oh yeah, I paid that insurance bill or whatever, but I forgot to put it on my return, or I forgot to give it to the accountant. When you have that experience, you know enough to say, hey, this is missing, come get it to me, or would you pay, or you had this last year and you didn't have it this year, what happened? So that's the best benefit of being in both kind of worlds.
Yeah. Yeah. But
I think the real estate world is a little bit, so
real estate's one of the best like
respect for what you guys do.
tax havens, right? I mean, real estate's one of the best sectors for like taxes, is what they say.
Yeah, if you do it right. Yeah, for sure.
Yeah, if you have the right accountant, right?
Yeah, you have the right accountant, you have the right strategy going in, you know how to buy the property because they say like you make the money when you buy it, right? You have to
Yes.
buy at the right price. And then, you know what's going in, how much you need to fix it up, right? And the market appreciates, it's been great, because the market just goes up, right? There's not really, since 2008, we haven't really had a time where the market, went down. So a lot of people could buy and hold, but the really good people, the really good flippers know that you go in, you buy at a reasonable price. You put in improvements that are going to add value, right? Because not all improvements add value. That's another thing too, from real estate school. Some improvements aren't valued in certain markets. Like you're not going to put in, say a pool in a place where it freezes half the time, right? You're not going to buy super expensive finishes in average neighborhood, right? You're going to kind of go and tailor your improvements to where you're at. And then you're able to go and market that and sell it for a really good price.
Yeah. Yeah. With the big beautiful bill that just passed,
Yeah.
I know you said you read most of it. What are the new real estate deductions that are in there? What are some of the new tax incentives over there? We got no
Yeah.
tax on overtime, no tax on tips.
Yeah.
So,
Those are the really big ones, right? Because that was Trump's main, points for the election. He's actually one of the few candidates who went and everything that he said is in the bill. Maybe not in like the absolute terms that he said it. There's always, the requirements, and they
Sure.
go and they chisel away at it. So it's hard to take, right? Because if it's overtime, well, it has to be qualified overtime. If they're tips, they have to be qualified tips. And then they make a whole bunch of regulations of what counts and what doesn't, instead of just flat, like, no tax on tips or whatever like that.
Right.
But
And there's caps on that, right? Too. There's caps on.
yeah, you're capped at 12,000 on overtime. There's a different number for tips, and then it depends if you're single or if you're married, filing jointly. So in your filing status, so you get into all the weeds on that. But for real estate, they did make bonus depreciation. So bonus depreciation now, instead of phasing out, it's 100% bonus again. So that's just so like everything that's capital, right? So you get, it's something that's not a fix, like something that's not real estate, that's capital. So you think of your purchases like your fridges, your HVAC stuff, anything that's not like a roof, right? Because a roof is part of the building. You have to depreciate that over 27 years if you're residential and that.
So anytime I buy
But all that could be
100%.
right. It's 100% now for bonus, right? And then there's even like kind of like a better area of the code that's called Section 179. That's been in before the big beautiful bill that I kind of like a little bit better, because 179, as long as they capped that now at 4 million, they raised the cap. It used to be somewhere around 2. Well, now it's 4 million of assets that you could put in service during the year, right? You could elect to deduct them 100% through Section 179. So it's kind of the same. It's the same thing as bonus. Just 2 different sections of the code. They're right next to each other. Section 168 is bonus depreciation. Section 169 is the other Section 169 depreciation is what they call it. But what Pennsylvania did, so because we're in Pennsylvania, and I'll talk to Pennsylvania people.
Yeah, you're on the
Pennsylvania
board.
does not
Don't you make these decisions? Go ahead.
Yeah, Pennsylvania does not allow bonus depreciation, right? So if you deduct it federally, right, you could. But Pennsylvania will say, no, you have to depreciate it straight line or whatever over the years, right? Pennsylvania amended their code 2 years ago to allow a Section 179 consistent with federal. So they match your federal rules now.
Okay. And so do you need a cost segregation study for both of those?
That's where it helps, right? Because sometimes usually that helps when you're buying something, right? Or you bought something from somebody and you didn't get it done, or you had it for a really long time and you want to segregate and you want to go and be able to depreciate your stuff. Anything that's not fully depreciated yet, split some out, right? You get the cost segregation study, and that's really nice. Because then you could go and you could say, because some people just buy the real estate with everything inside of it, right? And you depreciate it over, the 27 years, right? Well, what about the fridge? What about the stove? What about the appliances and everything in there?
The flooring, the roof?
Yeah, the furniture. Some people have the furniture in there, your couches and all that stuff, right? So, okay, you say this is what all this stuff would be, right? Placed in service, date, whatever study was done, placed it in service, took it out from the main real estate, right? And now, instead of having something that you depreciate over 27 years, you could have something that's depreciated over 5 years, or you could immediately expense it all at once. And
on year one. So if you make a bunch of money year one, you could go buy a building, cost seg it, and then
right.
accelerate depreciation.
Yeah. Here's even another thing too, because I'll give you the advanced tip. Okay.
I'm writing this down.
Sometimes,
Go ahead.
yeah, there's reasons to spread it out, right, over the number of years, right? Because the way that the system works is your taxes are in brackets, right? So you have your 10% bracket, your 12% bracket, your 22% bracket, right? And every year your brackets kind of reset, right? So if you're making so much profit in year one, right, you're going to go and you're going to pay until you fill up all your buckets. You're going to fill up 10% and 12% and 22% and 24%, right? So if you have all the profit in that year, right? So you could be up to the 24% bracket, right? And then the next year, you're going to go and you're going to get the same brackets to fill up again, right? So what you want to be able to do is you want to be able to fill up your buckets every year so that you take advantage of the 10 and the 12 and the 22 before you start getting really high, right?
Yeah.
What I've seen happen is sometimes people will go and expense things all at once, right? So now, you bought all this equipment, you bought all this, stuff, right? You take 100% of a deduction in year one, right? Well, now you just had income that was in a 24% bracket, right? And you took it all in year one. So now you kind of just went all the way down to zero, right? You didn't fill up any of your buckets, right? Well, now the next year comes along, right? And you have nothing more to buy, right? You already bought everything last year. So now you filled up all your buckets and you're getting taxed on 24%,
Yep.
32%, right? Because, hey, well, everything was that year. You went down to zero. You can't pay anything less than zero, in taxes. They give you refunds, but that's just a trick because it's money. It's your money back,
Yeah.
right? It's not their money if you go below, right? It's your money back. So it would have been better to take some depreciation in year
Over
one,
5 years.
leave some for year two, and then each year you're in the 10 to 12%, right? So 100% all at once isn't always the best strategy. It depends on, every person's tax situation.
Now, Mike, can you take that depreciation against a capital gain?
Yes. Yeah, not directly, right? But it factors in, right? Because your capital gain factors into your taxable income, right? And then that depreciation also factors into your taxable income, right?
So your capital gain will determine your bracket. Like
Your capital gains kind of taxed in its own set of brackets, right? Because you get capital gains brackets.
Will
right?
that come in as, will that raise your capital gains don't raise your bracket, your personal bracket at all? Or do they?
You have an ordinary bracket, right, which is based off your ordinary income. And then you have your capital gains brackets, which are based off your capital gains income, right?
Yeah.
So if you have lots of capital gains, they're going to tax them at the preferential rate first, right? So say you have a $200,000 capital gain, that's getting taxed at the 15% level, right? And then let's say you also have other income like W-2 income, right? So now you have 80,000 on top of that 200,000, right? That's going to be taxed at your ordinary rates, right? But it's going to be taxed on your ordinary rates after the 200,000. So you're going to get taxed at the, say 22% rate instead of the rate that 80,000 we taxed on if the capital gains weren't there. Right. So the income could go and it could be, and then to your point on the depreciation, right? You could take that depreciation as long as it's active, right? As long as it's not barred by your passive activity rules, right? Which we talked about earlier.
So you'd have to be a real estate professional to do this.
Yes. Right. Yep. Although there is an exception for a year of disposal, right? So if you sell real estate at the end for a loss, right, you could take all the loss.
Even if you're not a real estate professional.
Even if you're not a real estate professional, right? Yeah, because that's the year that it's sold, right? You can't do it while you have it. If it's depreciation while you have it, right, that loss is suspended, right, until it's sold. And then once it's sold, you could take it, if that makes sense.
Yeah, that all makes sense. Now, real quick, can you talk about the difference between corporate tax rates and ordinary income tax rates? Like for this year, we're electing corporate tax status. Can you talk about like why we're doing that?
Okay. Yeah. So you have different types of corporations, right? So you have C corporations and S corporations, right? Let's say that, right? So S corporations are flow through, where the profit at the end of the day flows through to the shareholder, right? C corporations are its own person. That's how they define it in corporation law. They'll say, and I'm not a lawyer, fair disclaimer, but
we had a disclaimer at the beginning as well. So
yeah, right.
That was that first 3 seconds.
Right. Yep. But corporations are like a separate person, right? So they have their own tax rate, right? That's flat. That's 21%, right? And then they go, and when they want to pass money to the shareholders, they have to declare a dividend, right? And then it's taxed again, right, at your capital gains brackets to individuals, right?
At
So
20,
that's that. So that's,
right?
yeah, the dividends are anywhere from 0 to 20, right,
Yeah.
depending on your other income.
Sorry, go ahead.
Yeah, so that's the C corporations, right? Real estate, it usually doesn't make sense to go into a C corporation, right? There's not many people that will do that, although in certain cases it could be, right? The other type of corporation is the S corporation, right? And this is what we're doing. So what that one's going to do is that one's kind of a little bit different. If you're just a passive real estate person, right, and you have real estate for investment, right, then probably just a normal LLC where it passes through the individual is fine, right? When you start having earned income, which is when you flip, right? Because when you flip, that's kind of considered earned income. You're kind of more considered in the business of it, right? Then there's self-employment taxes. So you have your Social Security and Medicare, the FICAs and all that. That's when it makes sense to do the S corporation, because then you pay yourself as a shareholder a salary, which it's a fair market salary for what you would provide. That's in part of the regulations. Like you can't just pay yourself, $1 or whatever. Like some of the C corporations do that, like Bill Gates and Elon Musk or whatever. Let's say they pay themselves $1, right? But for S corporations, IRS won't like that. You have to pay yourself like a fair market wage, right? But then after you pay your wage, that's the only thing that's subject to Social Security and Medicare taxes and your local income taxes, right? Everything else you're going to pass through to yourself, and it's going to be Social Security and Medicare tax free, right? You still have to pay the federal income tax on it, right? But you're not paying the self-employment tax, right? If you didn't have that S corporation, you made a lot of flip money, you'd be ended up paying self-employment tax on that whole net profit.
So you're saving like 15% by keeping the money separate in a corporation and paying yourself a salary as an S corp.
Correct. Yes. Yep. And then the salary is the deduction to the business, right? And it's income to the employee. So it'd be income to you, but a deduction to the business.
And then you could always distribute dividends or distributions from the company.
Yep.
To the employees. And that's taxed at a lower rate.
Well, to the shareholders. You could distribute to the shareholders.
So the employees. And you can have 100 shares with an S corp.
You could have 100 shareholders. So 100 different people, right? Yeah. But you cannot have more than 100 people, and you could have like an unlimited number. Like sometimes like the shares are kind of like you could do 10,000 shares and say 5,000 here and 5,000 the other one. It's still 50-50. It's the same as if you had 100 shares and you gave 50 and 50. But
just the value.
Sometimes it's just how you want to divide the math. Like how much do you want to go by a decimal point, right? Because the more shares you get, better decimal points.
Yeah, that's really big. Everyone that's listening to this, so if you didn't get it, you should watch it a couple times. But I mean that's big. Like that's big financial advice for people that are in real estate and they have high active income. So that's some good free game right there.
Yeah, if you're doing a lot of like flips or wholesaling commissions and stuff like that, and it's making a lot, like it has to make more than what you think a reasonable salary would be, right?
Even if you're a top performing agent, probably if you're really killing it, some agents probably meet that threshold as well. I'd say.
Sales agents like under a broker, it would be tough because the way that like a sale, like if you had a brokerage could certainly do it, right? So a real estate broker license, but if you're like a real estate salesperson, like me, it would be difficult.
You're just a 1099, right?
Yeah. And the thing is, like I can't take that 1099 and make like an S corp out of it, right? For the real estate commissions, right? Because that 1099 goes in my name, and I'm the one.
You're the license holder.
Yeah, and that's how they get you, because it's the way the agreement is, right? The agreement between me and my broker has it that I'm paid and not a corporation. And I don't even think I could switch it to a corporation if I wanted to, because the corporation's not licensed, right? At least my corporation wouldn't be real estate licensed. I've had that problem with financial advisors when they want to go and create like an S corporation or something like that. And there's actually a tax court case where that happened to somebody, where they were, an advisor, and they had an agreement with, they call it like a broker dealer. So it's basically their like real estate broker, same thing. It won't let them have the money to their corporation. Like it has to be to them personally because they're the ones who are licensed by FINRA or whatever whatever their regulatory body is.
So a realtor, so what can they write off? They could still write off stuff.
Oh yeah. Yeah. All ordinary necessary expenses for their business. That's
Okay.
section 162.
I like, he knows the numbers. This is
Yeah,
great.
that's when I knew that he was.
I got 179, 168 for bonus. Yeah, this is great.
Charity is section 170. So if you wanted to give to nonprofits, that's section 170.
That's awesome.
Yeah, I mean, I don't know all of them.
I'm going to quiz my accountant. I'm like so excited. That's why I'm writing these numbers down. Yeah, what's section 1679? I just can't wait. If they don't know, I'm calling you, Mike.
Yeah. Yeah. Sounds good. Yeah. It's you don't know, like you'll never know all of them. There's so many dang sections in that book.
No, but I'm pretty impressed. Just
it's the ones that come up often. Right?
Yeah, well, Jake's just throwing stuff at you. You're like, oh, that's section 162.
Yeah.
I'm thinking, damn.
Yeah, all ordinary
that's
necessary.
how our phone calls go.
Yeah, all ordinary necessary expenses of being a realtor. So some of them are like a little bit more documentation that you have to have.
Can they write their cars off or anything like that or no?
Yeah.
Maybe just the miles.
Use it for business. Yeah, keep track of your miles right off your car. You could do it different ways too. Like some people just take the standard mileage deduction, right, which is at 70 cents now. So it's pretty
that's crazy.
It's pretty high. So a lot of people just do that. If you use your car for business like every day and it's like 100% for business, you could go in section 179 your car, right, your automobile, right, as long as it's not like you heard of that 6,000 pound automobile limit, like why everybody buys the really big ones.
Yes, the G-Wagons and the big 2500s. Yes.
Yeah, that's so they could go and
write the whole thing off.
Yep. Yeah. So
if you get a little car,
so you can only do that with one, right? With one vehicle.
Yeah.
No.
It's not necessarily right. Like you have to go back to like the ordinary and necessary, right? Because the way you'll get trapped is like, okay, like you're one person and you have a fleet of vehicles. Like say you have 5 vehicles.
Yeah,
like you have one for every day of the week. They're gonna say, is that ordinary and necessary for your business?
Yeah, that's Monday. Yes, that is.
That's my Monday.
But if you're real estate, okay, like you really need like all those cars like to take people and showing. So it's situational. People will say the same thing too with people justify for private jets. You see like the corporation, like if you're a CEO, like Microsoft CEO, they need a corporate jet because of the time savings and all that. So they write off their jets. Sometimes with like luxury cars, like if you put a Lambo in your business, that kind of gets a little tricky because they could say, okay, what business you have is it ordinary and necessary? Your comeback is, hey, I need that because it gives me a professional image, right? Especially if you're selling in the high end areas, like like Beverly Hills and all that, they write off their Lambos.
Yeah, I just have to get there quick.
Yeah, there you go.
I'm always behind. Time is tight. Lamborghini.
That's right. 100%. Yeah.
And you can deduct your auto loan interest now too, right? That's something that's new.
Yeah, that's a personal auto loan interest, right? So anybody.
That was in the bill, right?
Yeah, that was the big beautiful bill.
Okay.
Yeah, because they want to incentivize cars built in America.
Yes, but it has to be a car made in, right? Correct. So it has to be yes.
Correct. Yep.
That's good to know.
That is good to know. Well, that makes me want to buy a new car, honestly. So.
Yeah, seriously. Yeah, if you use it for your business, you could deduct the interest anyway. But this is if you don't use it for your business. If you just have a personal car, personal interest, that's deductible now.
And the only way to fully deduct a car is to buy it cash as a business, right?
No, you could get a loan on it. Yeah.
Oh, you can get a loan on it and still deduct it fully.
Yep.
Awesome. That's good to know. Great. So do you think the big beautiful bill is like this big tax thing that everybody's been talking about? Like, do you think it's gonna spur
only help the rich?
Yeah.
Yeah, because here's the thing. It helps everybody, right? Because the tax rates stayed where they are now, right? They would have automatically went back up to 10, 15, 25%, the brackets instead of where they are. The child tax credit went to $2,500 instead of $2,000. So that helps, normal people, right? A lot of the like provisions in there, like the overtime, the tax on tips, like that's all stuff that helps normal people.
Yeah, that's big.
Yeah. But that assistance to normal people, like in terms of like dollars off your taxes, is probably like a couple hundred to maybe a few thousand, right? For normal people, right? When you get into like the bigger areas, like it helps bigger businesses a lot more, right? Like you're helping, the cows of the economy like deduct more for their factory equipment and all that. It's trying to like spur investment. There wasn't any changes really that much to the corporate rules. Instead of one thing for research and development expenditures and intangible like software development costs, like that helped too. So like this was a change the first time in Trump's, right? Before Trump, you could deduct your research expenses for building like a software program, right? Because the software program was just considered like, like a regular thing, not a capital asset, right? 2017, they changed it. They let that expire. They said, well, now you have to capitalize your software development costs over and depreciate them over 5 years, right? Well, now it's back to the way it was. That big, beautiful bill changed that. You guys, I know, Jake, you dabble in software. You were showing me the cool tricks with your
Yeah, you
program.
told me I should quit real estate and just do that.
Yeah, sell that software. I'm telling you, you could get that exposed to like bigger places, like brokerages will buy that. People will buy that software. That is really nice.
Yeah.
But like that, like
Right
if you
here,
had,
guys, buy my software.
yeah, if you had like hundreds of thousands going and like invested in, building that, right? Yeah, you would have had to capitalize and depreciate it, right? Well, now you could just write it back. You could write it all off. That's a plus to a lot of businesses. That's going to save, the big tech companies a lot of money, right?
Mhm.
But it's not really going to help, the average person. So,
But the theory is that they're going to have to reinvest a lot of their profits to be able to lower their tax bases for the most part.
stock buybacks, dividends, it goes to the shareholders mostly.
So the
Let me-
stock market should do pretty well.
Yeah, it'll go to your 401ks too. Yeah,
Yeah.
stocks go up. Yeah.
Mike, let me ask
Did
you
you
something.
see? Yeah, I was just saying. Did you see Meta and Microsoft? And they're all stocks are doing pretty good right now.
Yeah. The Magnificent Seven are
Yeah.
it's so crazy. We're in
Yeah.
a 1929 economy right now.
Sorry, Mike. I think you had a question there.
Yeah, are you going to use AI in accounting world or?
Oh, all the time.
Yeah.
Yeah, we're just starting. We just got AI in our email software now, so we could respond to emails using AI. There's
Is it going to help with numbers and stuff like that? Or you're going to put in and say, hey, Jake's a real estate investor, and you just put it in and it's going to be like figure all out. I don't.
Yeah, I'm hoping one day it's going to let me retire on a beach somewhere, and then
Yeah.
I'm only going to have to make a couple calls here and there, and then most of the number crunching is going to be done by the
AI.
Yeah, but it's all about how you use it, right? It's never going to go and replace the person, right? Because I think I was at the NASBA convention. That's for the Board of Accountancy, right? And one of the presenters did an AI presentation, and it was really, really good. I really enjoyed that presentation. And it said that the core of the CPA profession is trust, right? And that's what's never going to be replaced. And so, the AI is only as good as what goes into it, as the person who's
Yep.
putting, the questions and asking it the right way and being able to understand and distill the answers that are coming out of it. And that's why you have, a trusted CPA to go and interpret that AI, what it's telling you.
Sure, because a lot of that information that Jake's tell you is private. It's sensitive.
Correct. Yeah.
So when AI has it, now it's just keeping it, and
Correct. Yeah.
it could spill it out.
I think it already, it knows a lot about me. Just everything Jake knows all about me and
Yeah, he just
everybody probably already.
Yeah, well,
it came from AI.
yeah.
Yeah. It's scary. I mean, you see that stuff and like some of what it knows and what it could do.
Yeah.
You know, it could lie. I read that in an article. It could lie to
Well,
you.
yes, it said it was it lied. I was reading that too. Jake, did you see that?
Yeah, well,
Well, they were saying AI is actually becoming like a human. It wanted to lie. It didn't want to tell you the truth. And I don't know.
well, it's programmed to satisfy the customer for sure, and
So
that's what it's trying to do. But I found if you're mean to it, that really helps. Like, you're a fucking idiot. Like, why would you give me that answer? That helps.
yeah.
Does it? Probably make it cry in short circuit.
I actually was just in a meeting today where I was in a meeting with Eddie Speed and Jeff Walker, which these guys are like, they're OGs of the creative finance world. They do legislature for creative finance. They're big. and they were talking about how there's these companies that are building AI agents for banks to audit their loans that they're servicing. And a lot of the subject to deals that have happened in the last 5 years, these AI agents are able to sift through the bank records in a day, and they're calling all these sub two deals due. So like
Oh,
the word
wow.
on the street right now is like 20% of the sub two deals in the last 5 years are about to be called due because all these AI agents are being deployed into these banks, and especially the FHA and VA loans, because we have a new director and they're not playing with the whole subject to things. That was another meeting I had today. So I definitely think like AI is changing a lot of things. Hopefully the bookkeeping goes away. Hopefully all the transactions just automatically classify themselves. That would be nice. That would be good.
Right. Yeah. Yeah.
But so leaving here to wrap this up, is there anything that people should know in their day-to-day life to look out this year for tax savings, just in general or in real estate? Is there any tips that you can give for people that are looking for tax savings?
Yeah, for normal people out there, number one is that overtime, right? Because I'm talking to a lot of people about this, especially the people that have their businesses where they give themselves a salary, right? Like switch yourself to hourly, make yourself an hourly employee and, work 50 hours one week, say 35, 30 hours another week, right? Now, you're capturing that overtime, right? Because you'll get paid for overtime for that week, and then the next week you could go and make it up essentially, right? Like however you want to do that. Like if you could change your schedule like that, right? Get overtime. If you're an hourly employee and your boss is offering some overtime, take it, get some overtime, and then maybe they'll give you a vacation or a couple of days off, down the road. Get your overtime, because now that's going to be a deduction against your taxes up to $12,000, right? So that's
So
going to be
they're
really
actually
helpful.
they're actually taxing my overtime from my check, and I get it
Right.
back at the end of the year.
Correct. Yeah, that's the way it's set up now. Like
Okay,
there's no,
that's what I
it's
wanted
gonna
to ask. So,
Yeah, it's going to factor into your normal
and
wages.
then
There's no
that is
whole.
the same thing then with your tax on tips,
Right.
correct? Okay.
Correct.
So
Yeah.
because someone was telling me, no, my daughter is still getting taxed on her tips,
Right.
and I said, I think what you just told me. I said, I think they take it back at the end of the year. If you pay this, I paid 5,000 in taxes on my tips. I'm going to get that back at the end of the year.
Yeah. Yeah. Because remember, it's all new, right?
Yeah.
So it's never
Nobody
been.
nobody knows, but the guy was yes, Jake.
Well, does this kick in 2026, or does this kick in
No, this
No, it
starts
started right
this year.
away.
Yeah.
right away?
Yeah, the
Oh, well,
overtime and the tips for sure, right? That
Yeah.
was right
Yeah.
away.
Yeah. And I think the car loan interest is another one that
Yep.
started now. So yeah, there's a
awesome.
lot.
I didn't know that. Let's
Yeah, I'm
go.
paying myself overtime.
Yeah.
Yeah.
All right. What car should I buy, Mike? What should we do? They got
Yeah.
rid of the EV tax credit, right?
What kind
That's
of
it.
credit?
That is ending very shortly, the EV tax.
The
Yeah,
EV.
that's out.
It's coming up.
Yeah.
That was the whole Musk Trump feud.
Right.
Yeah,
So
he wanted to extend that.
yes, and that
I
didn't
guess if
go.
they stayed friends, he would have.
Yeah.
But then Musk said something. He's like, we're done with that EV crap.
Right.
Yeah. Then Musk said that he was in the Epstein files, and
Yeah,
so,
and he still didn't get the tax credit.
Yeah, but definitely that. Yeah, for a normal person, maximize your chances of getting overtime. The other thing too is like if you're having a kid, they have those new Trump accounts or whatever. I think that's what they branded them. Seriously.
Yes.
that's
Yeah,
big.
yeah. Start that. That's like a normal savings account, and they give you like a tax incentive to put that in there. I forget what it is exactly. If it's like $1,000 or whatever, but they throw some in there for you, right? And then you could start your 529 accounts for your savings for. You don't have to use it for education anymore. Well, like you'd have to use it for education, but if you don't, they say if the child doesn't go to school when they're 18 or 19, you could roll that over into an IRA for them. Like it's more flexible now, right? So you don't have to just use it on education when they turn 18, right? So max out those accounts because those are state deductible for Pennsylvania up to a limit, and then when it gets taken out, there's no taxes on using it for education. So, and that's the compound growth, right? So if you start young, right, you're putting into the market, right? By the time 18 years passes or whatever, and like even a little savings helps.
Yeah.
Yeah.
Great.
Can
So
somebody with a kid start at 5 years old? Is that too late or?
yeah. Oh no, it's never too late. No.
Okay.
Yeah. Actually, because Pennsylvania you get to deduct 3% for whatever you put in. So I've seen people open these things like a year before they're going to college, put the money in, and then take the money out to pay the school, and you save the 3%.
Yeah, yeah.
I mean, it's I don't know, it's kind of like a rare thing because you're putting in and going right out, and you're not really letting it grow. But if you're doing it at like the 10,000 a piece, you're saving $300.
Yeah, I don't know if it's worth the hassle.
Yeah,
And then
and,
and
most
you're
of the
going
time,
to charge me 300 to do it. So no,
probably, yeah, yeah.
it's a wash.
Yeah, probably, right? Exactly. But if you start like, hey, you put like even like 1,000 in every year, you're probably talking.
And besides giving regular people, how about also brand new investors in the real estate? How do should they create an LLC? Should they do it in their own name, or I don't know? Any advice for a beginner, because a lot of them, they don't know.
Yeah. Yeah. Beginners, I say definitely do the LLC. Because when I bought my property, I bought it in an LLC because you don't have like not a corporation or anything like that, just like an LLC that protects your asset, right? Because then if anybody, like the worst they could do is get the house, right?
Yes.
Like you have insurance on the property, okay. And then say the insurance like doesn't pay or you go over the limit or whatever, like they could go after the house, right? And then nothing for your personal assets, right? If you didn't have that LLC and you bought it personally, you're open. You're open to attack. So just because you never know what could happen. So definitely do the LLC. It won't change anything on taxes unless you go and do other kind of strategies, which you can get into with your accountant. But the LLC is definitely a plus.
Well, thank you.
Yeah, and then you can separate too if you want to do more. Get different LLCs.
Yeah. Well, you're going to give us all your information so people could contact you.
Absolutely.
Yeah. Are you taking any clients right now, Mike?
Yeah, only the ones that you refer, because I know they're good. So
Okay.
yeah, they have the blessing of Jake. We'll keep it exclusive. But no,
all right, so they got to reach out to Jake first before they reach out to you.
Yeah, you got to get.
I don't know if you want that.
Get a good blessing, but no, we're helping. I like to help people, so that's the thing. So I'll help everybody. I'll try.
Well, you seem like a very nice guy, very well knowledged. I'm still impressed about the numbers here.
Okay. Oh,
section,
the different
section 162, 170. Yeah.
Okay. Yeah,
that's also
public service as well.
So. Yeah, trying to think of any more that I would know.
You know more.
Yeah, probably.
Well, thank you, Jake. You have any more questions?
I got one about the fire company, but
go ahead. We got time.
Okay.
So serving on the volunteer fire company, because you work as treasurer there, what are like a local fire company's financial needs typically? If anybody wants to help their local fire company out, like what is the biggest thing that they need?
Yeah, mostly it's volunteers. It's people. Nobody wants to help them anymore. It's so sad. But because like these are it's like a volunteer fire company. So these are people who are taking time out of their days who have other jobs and do other things, and they're going and fighting fires, right? There's not a lot of young people in our company, like people our age. Like I'm probably the only one our age. Maybe there's a couple, like 2 or 3 that are like my age in our company. There's a couple of juniors, but the majority of the company is probably like 50 years old or more.
Hey, calm down.
Yeah, like just say it. So, but like it's like people our age that want to get involved in like helping the community, because that's really what you need, or else you're gonna have nobody to come out when there's a fire.
Well, I feel that way with your ages. You guys don't want to work. You two are few. I don't know enough people like you at your age. My son works, but a lot of their friends they don't want to help. I feel like they don't even care about the community. So your community is saying, hey, we really don't care. Let everything burn down. I'm not going to help.
Yeah,
I mean that's sad.
Yeah, and I don't know. Maybe people don't know that it's out there. I mean, I kind of got because the way I got into the fire company was the treasurer who used to do it like passed away, and then they knew I was in the township and they asked me, hey, would help out and
But you're helping out. You're not.
I don't do anything else. I mean, I don't go and like fight because it's a commitment. Right. Yes. There's trainings. There's safety for the firefighters, safety for the people who you're, bringing out of the building when you're going in. Like you have to be able to do it right. Yeah. And it's a time commitment for people to go through and learn. Like our fire company is blessed. Like we have enough money where we pay for people to go to trainings and everything like that. Like you're not paying for that out of your own pocket. Like as a volunteer, like, you're paying for the fire training yourself, and then you're going and you're fighting the fires for no pay for people. Like it's like you really have to thank the people who do this.
Sure, that's a lot, and they see a lot of bad stuff too.
Yeah,
But
yeah,
but if you're a kid out there right now and you're searching for meaning, or you're just sitting at home and you're depressed, go join your local fire company.
yeah.
You
And we
know?
have fundraising events, we have bingos, and we have all this stuff. It's like, like we always take, just ask to help and we'll find something that
Yeah,
people can.
I have friends at my age, they love it. You know what I
Yeah,
mean? They get out of the house, they're hanging out, they take care of the fire truck. I mean, they really like being there.
yeah,
Yeah.
And then they save lives.
exactly.
Yeah, it's pretty cool.
That is
Yeah.
cool.
Some states have a tax credit. Delaware has a tax credit for firefighters.
Yeah, I was
That's
just going to ask
what
you
you
that.
should
Do
do.
do you get something after you're like 10 or 20 years
No,
or no?
Yeah,
no.
Mike, you should be putting that in the board. You should
Call your representatives. Call your state representatives, right? Your senators and your House people, and tell them, hey, like, let's get something
Yeah,
for
that,
our local
that would be great.
firefighters.
Yeah, that would do it. I mean, if you give a tax credit for being a volunteer firefighter, that would do it. What do you
They
think?
should get something.
Yeah,
They should.
100%.
Wow.
Yeah. Well, awesome.
Thank
Well,
you.
when you
Yeah,
run for
thank you guys.
Congress, Mike, we're going to be voting. So,
Yeah. Thanks so much for having me on. I appreciate it. It was nice spending this hour with you guys.
Yeah,
awesome.
thank you.
Thanks for coming on. Thanks for all your tips and all your advice. We really appreciate it. And give me your information. We'll put whatever you feel like sharing down in the description. And if somebody wants to get a hold of Mike, they can get a hold of him in the description. We'll have his info. So thanks so much, Mike, and appreciate
Thank
you coming on.